All right, so are you ready to like really get into the market outlook for the rest of 2025 and even early 2026?
Let's do it.
Okay, cool. So we've got like this really interesting interview here with Mark Newton.
Okay.
He's the head of technical strategy over at FundsRat.
Oh, yeah, I know him.
It's from Global Money Talk, and he like pretty much nailed the market's performance last year.
Yeah, he did.
So we're kind of going through his predictions and trying to see what we can glean from it.
Yeah, and what I think is interesting is he's actually quite bullish.
Really?
He sees the S&P jumping maybe another 12 to 15%, reaching like 6650 by the middle of 2025.
Yeah, that's what I was kind of surprised about too.
Yeah.
Because like historically, the first and second years of a new presidential term
Right.
tend to be a little quieter,
Yeah,
as far as market's concerned.
You're right.
But he seems to think maybe things might play out a little differently this time.
Yeah, I think he's got some pretty interesting points. Earnings growth is still pretty strong. Interest rates are still relatively low.
Okay.
So those are kind of carrying things forward. But then he throws in this curveball about this 41-month cycle.
Right, the 41-month cycle.
Which is a historical pattern that kind of suggests that we could see a peak around mid-2025.
Yeah, does that make you nervous?
I mean, it's something to keep in mind, especially if you've got like a shorter-term outlook.
Yeah.
You know what I mean? But I think he also suggested that the first half of the year could see even stronger gains than the second half.
So maybe kind of front-load the gains and then
Right, exactly.
see what happens.
Yeah, adjust as we go.
Okay. All right, so let's dive into like some of the specifics. Like
Sure.
what about certain sectors? What does he think is going to do well?
Well, he's particularly bullish on financials and industrials,
Okay.
which have already been performing well. And I think it's been driven by, deregulation and some of these tax cuts and things.
Yeah, the Trump trade.
Right? Some people call it that, yeah.
But here's where I think he gets really interesting. He doesn't think that tariffs are going to be as inflationary as people think.
Yeah. What was his reasoning there?
I think he thinks that maybe China's recovery might be more fragile
Oh, okay.
than people think. And then also that like AI is going to start having some deflationary pressures.
Interesting.
And he also mentioned, record U.S. oil production.
Right.
Like we're over 135 million barrels a day now.
Wow.
Which could also, dampen inflation.
Yeah. So it's kind of like a tug of war between different forces.
Yeah, it's really hard to tell how things are going to play out.
Yeah, it is. It just highlights, I think, the need to be flexible.
For sure.
Not get too caught up in any one prediction.
Totally. Okay, so then what about like the dollar and commodities?
All right. So for the dollar, he's predicting strength for the first half of 2025, maybe peaking in the summer and then potentially declining.
Okay.
And that dollar strength, could have big impact on commodities.
Right, especially for somebody like me who likes to, dabble
Exactly.
in the commodity markets a little bit.
Yeah, that'll be something to watch.
Okay, so he's actually bearish on oil,
Interesting.
citing that record U.S. production, but get this, he is very bullish on gold.
Oh, really?
He thinks it could hit new all-time highs by the end of this year and continue to outperform in 2025.
Now, this is the guy who called it right last year.
Yeah.
So his outlooks are definitely worth considering.
Absolutely. But he's not as high on, like, silver or copper.
Yeah, well, silver, he's saying because of China,
Right.
And then copper also tied to China, and then you've got the tariffs and everything.
Right. Okay, so precious metals over industrial metals.
Yeah.
Interesting. Okay, now what about bonds?
All right, so this is where things get interesting. He actually thinks yields are going to trend down starting in the spring of 2025.
Okay.
Which would be good for treasuries.
Wow, that's a pretty bold prediction, considering so many people are, like, expecting rates to keep going up.
Yeah. Yeah, I mean, he's basing this on a couple of observations.
Okay.
The first being that this post-COVID recovery has been anything but normal.
Okay.
Right? And you've got tons of investors still locked into these, like, super low rates.
Or from the past couple of years.
Exactly. And then his second point was kind of a warning that the Fed's rate hikes might not have fully impacted the economy yet.
Oh.
So he's saying rise in mortgage rates are already, like, making housing less affordable.
Right.
And that could lead to some economic weakness later in the year.
Which would then put downward pressure on yields.
Exactly.
Okay. And he even went so far as to say that we've just witnessed the end of a 40-year bond bull market.
Wow.
That's a big statement.
It is. I mean, how many investors today have actually experienced a prolonged bear market in bonds?
Yeah, not many.
Not many at all. It's a whole new world.
Yeah, it really is. And speaking of new worlds,
yeah,
we got to talk about Bitcoin.
Oh, we got to talk about Bitcoin.
15,000 in 2022
right.
to almost $100,000 now.
I know. It's crazy.
It's absolutely insane.
Absolutely insane. But you know what? Newton is urging some caution here.
Oh, really?
He thinks this incredible surge might be nearing a peak.
So what's he predicting?
Well, he thinks it could hit 111,000
Wow.
before experiencing a correction that could bring it back down to 50 to 65,000
Oof.
sometime in Q1 of next year.
Okay, so pretty hefty pullback.
Yeah.
But not the end of the world.
No, not the end of the world.
Okay, what does he see happening after that?
He thinks further rallies are on the horizon, potentially peaking next fall. So, some short-term volatility, but the long-term trend still seems bullish.
Buckle up.
Yeah, buckle up.
It sounds like we're in for another wild ride
It does.
with Bitcoin. So I guess what's really interesting here is he's not just like relying on gut feelings or speculation.
Right.
He uses technical analysis.
He
a lot.
does.
So I'm curious, like, what's his philosophy behind that? What are some of the specific tools he uses?
Well, I think he believes that technical analysis can help you kind of cut through the noise and the emotion of the market.
Okay.
It helps you focus on price action and volume and sentiment
Got it.
to identify trends and, make hopefully better decisions.
So it's almost like decoding the market's like secret language.
Kind of, yeah.
Okay.
And he argues that market movements are often influenced more by cycles and sentiment
Really?
than by daily news and economic data.
Wow, that's fascinating.
Yeah.
It's like the market has like a mind of its own.
Right, and that's why he puts such an emphasis on understanding market psychology
Interesting.
and sentiment as key elements of successful investing.
So what are some of the specific tools that he uses to kind of unlock all these insights?
Well, he's a big fan of Elliott wave theory,
Okay.
which is based on the idea that, market trends unfold in these predictable 5-wave patterns followed by 3-wave corrections.
Okay, Elliott wave, that rings a bell, and it all ties back to the Fibonacci sequence, right?
Yes.
Those mathematical relationships that pop up everywhere in nature.
Everywhere.
It's wild. I know. You find it in the markets, too.
We do, and he believes that those same relationships appear in market cycles, and that understanding them can offer valuable clues about, potential market direction and risk management.
That's really interesting. But there's another big factor that we can't ignore here.
What's that?
AI.
Ah, yes, the elephant in the room.
Right, AI is starting to really make its presence felt.
It really is.
In the markets.
Everywhere.
And Newton seems to be a little hesitant to fully embrace it.
Yeah, he is.
In his analysis, at least for now.
At least for now, yeah.
He seems to prefer to rely on his own expertise and judgment.
Yeah, I think he acknowledges the power of AI to process all this data and identify patterns and even execute trades.
Yeah.
You
But it makes you wonder, can it really replace human intuition and judgment?
Yeah, can an algorithm truly understand market sentiment and those unpredictable swings in human behavior that can really drive volatility?
Right, that's the million-dollar question.
It is. As AI becomes more and more, integrated into financial markets, what skills are going to be the most valuable for investors?
Yeah.
Is it going to be, the ability to code and program algorithms? Or is it going to be the ability to interpret those AI-generated insights and make judgments based on a really holistic understanding of the market?
That's a great question.
Yeah, it is, and one that we'll have to keep thinking about.
Absolutely.
Welcome back. So we're kind of continuing our deep dive here into Mark Newton's predictions.
I know. It's really amazing how much you can get out of one interview with this guy.
Yeah, you really got to unpack it.
Yeah, for sure. Before we go back into those technical analysis tools,
Yeah.
I want to hear from you, what's been resonating with you so far?
Yeah, what's piqued your interest? What's feeling relevant to your investing?
Yeah, is it that potential market peak in the middle of the year?
Uh-huh.
Is it his take on tariffs? What's standing out?
Hold on to that thought.
Yeah.
As we go back into, the nuts and bolts of his technical analysis toolbox.
Okay, let's get technical. So we talked about Elliott wave last time.
Yes.
But he also uses Fibonacci retracements a lot.
He does.
Can you break that down for us? What are they and why are they such a big deal in technical analysis?
So imagine a stock that's been trending upwards,
Okay.
but then it takes a dip.
Okay.
Fibonacci retracements can help us pinpoint those potential levels of support
Okay.
where that dip might stop and reverse course.
Oh, so it's like a bouncing back point.
Exactly. It's like having a map to anticipate the market's next move.
Okay, so it's not just looking at the charts.
Right.
It's understanding the math behind it.
Yeah, and these retracement levels are actually derived from the Fibonacci sequence.
Oh, wow.
Which is that fascinating mathematical pattern that we see all over in nature.
It's crazy how you find that in the markets, too.
I know, it's like the market has a secret code
Yeah.
that we're trying to crack.
Right, and he mentioned this thing called TD sequential.
Oh, yes.
What is that all about?
So TD sequential is an indicator that was developed by this guy, Tom DeMark.
Okay.
Remember how we were talking about how he has this knack for like spotting counter trends
Yeah.
and predicting these like pivotal turning points?
Yeah, he seems to have a sixth sense.
He does, and TD sequential is one of the ways that he does that. It helps traders identify potential exhaustion points in a trend,
Okay.
signaling that a reversal could be right around the corner.
So like if a stock has been going up for a while,
Yeah,
this will tell you that it's about to go down.
it could give you a heads up, yeah.
So you can get out
Yeah,
before it crashes.
exactly. It's all about managing risk
Okay.
and maximizing your chances of winning.
Yeah, in a market that really likes to mess with us.
It does. It does.
It really does. This is making me rethink how I approach investing.
Mm-hmm.
You know, we get so caught up in the headlines and the economic data,
Yeah.
but he's saying that a lot of these market movements are driven more by these underlying cycles and sentiment.
Yeah, and I think that's what's so intriguing about his perspective.
Right.
He's basically saying that the market has a mind of its own.
It's like a collective psychology.
It
Defies all logic.
Right. And that's where understanding these technical tools can really come in handy.
Yeah, it's like learning how to read the market's body language.
Yeah.
Okay? But like, how can somebody like me, who's not a professional trader,
Right.
even begin to incorporate these techniques? Like, it seems so complex.
Well, you don't need to have a PhD in mathematics to get started. There are a lot of resources out there, books, websites, courses.
Okay.
You can learn the basics. And then there are always financial advisors who specialize in this area who can help you build a strategy
Okay.
that aligns with your risk tolerance and your goals.
So it's like any new skill.
Exactly.
You got to just put in the time and the effort
Yeah.
to learn it.
That's right. And remember, technical analysis is just one piece of the puzzle.
Okay.
You want to combine it with, good fundamental analysis, understanding economic trends, and then, of course, your personal financial goals.
Right. Okay, speaking of game changers,
Uh-huh.
we can't forget about AI.
Oh, we can't forget about AI. It's everywhere.
It's everywhere. And it's started to make its way to the financial world, too.
For sure.
Naughton seems to be a little hesitant to fully embrace it
Yeah.
in his own analysis for now.
At least for now.
He likes to rely on his own expertise
Right.
and judgment. But he does acknowledge that AI has like this immense power
Oh, yeah.
to analyze data and find patterns.
It's insane.
It really is. So it begs the question, can AI actually outperform even the most skilled human analysts?
Yeah, that's a good question. Can it, process information at a speed and scale that we can't even fathom?
Yeah, but can it replace human intuition?
Yeah.
Can it replace judgment?
That's the million-dollar question.
It is.
As AI becomes more integrated into markets,
Right.
what skills are going to be the most valuable for investors?
Yeah.
Is it going to be the ability to code algorithms, or is it going to be the ability to interpret those AI insights
Right.
and make sound judgments
Yeah.
based on a really good understanding of the market?
That's a really great question. And that's something we're going to explore in part 3
We are.
of this deep dive. We're going to delve into Newton's predictions for specific assets and sectors.
Yes.
And tackle that question head on.
How can you position yourself
Yeah.
to really thrive in a market where AI is playing an increasingly dominant role?
Yeah, for sure. So stay tuned. We'll be right back. Okay, so we're back for the final part of our deep dive into Mark Newton's predictions.
And we're going to get into some specifics.
Yeah, let's zoom in on some specific assets and sectors that he talked about.
All right.
He's especially bullish on gold.
He is.
Thinks it could hit new all-time highs.
Yeah, I think his reasoning there is that as the Fed starts to maybe ease interest rates a little bit,
Okay,
gold's going to become even more attractive to investors seeking that safe haven.
right. It's like that flight to safety.
Exactly. When uncertainty rises, people flock to gold.
They do. And remember, he specifically prefers gold over silver.
Right.
Because of silver's sensitivity to that uncertain Chinese recovery we've been talking about.
Exactly.
What about other commodities, though? He wasn't as high on oil.
No, not so much given the record U.S. production.
Right. And then copper, he was kind of neutral on.
Yeah, more neutral on copper just because of its dependence on China.
And the tariffs and everything.
Right. All of that.
Okay, so mixed bag for commodities.
Yeah.
But gold seems to be the shining star.
It does in his outlook.
Okay, let's talk Bitcoin.
Let's talk Bitcoin.
It's been on a wild ride.
It has.
And Newton thinks that this surge might be nearing a peak.
Yeah, it's been pretty parabolic.
He's predicting it could hit 111,000
Yeah.
before a correction back down to like 50 to 65,000.
Yeah, sometime early next year.
So that's a pretty significant pullback. How do you think people who've been following Bitcoin would react to that?
I mean, it would definitely be a little bit of a gut check, you know? But I think Newton sees it as a buying opportunity for those who are, ready for it. And remember, he's not abandoning Bitcoin completely.
No, he's not.
He's saying more rallies are possible, peaking next fall. So,
Wow.
still a lot of volatility to come.
Okay, so volatility seems to be the theme for 2025.
I think so.
Newton's insights are painting a picture of like a year full of potential twists and turns.
Yeah.
We've got a possible market peak mid-year.
Right.
We've got a strengthening dollar, and then the ever-growing influence of AI.
Yeah.
So how do we navigate these choppy waters?
Well, I think first and foremost, it's a reminder to stay diversified.
Okay.
Don't put all your eggs in one basket.
Especially in a market like this?
Especially a market like this, exactly. Consider a mix of asset classes, stocks, bonds, commodities.
Maybe even some crypto?
Maybe even some crypto if you're comfortable with the risk.
Right, exactly.
It's not for everybody.
Not for everybody.
But I think it's also crucial to stay informed and be adaptable.
Okay.
Don't just set it and forget it.
Right.
Review your portfolio regularly and be ready to make adjustments based on, new information and new trends.
Be flexible.
Exactly.
Okay. And then lastly, what about incorporating some of those technical analysis techniques?
Yeah, I think that can be really valuable.
Elliott wave?
Right. Fibonacci retracements, all those tools that can give you a little bit of an edge.
Yeah, and help you identify opportunities
Exactly.
that maybe other people are missing.
Right. And, it can seem intimidating, but there are resources out there to help you learn.
Yeah, for sure.
You can consult with an advisor.
Absolutely.
Knowledge is power, especially when it comes to investing.
It really is. So as we wrap up this deep dive,
Yeah.
I want to leave you with one final question.
Okay.
As AI becomes more and more integrated into the markets, how are you going to stay ahead of the curve?
That's a good question.
Are you going to embrace the power of the algorithms?
Yeah.
Let them guide your decisions.
Or are you going to focus on your intuition and judgment?
Yeah.
Those things that machines can't quite replicate yet.
Right. It's a brave new world out there.
It is. It's evolving.
And the people who can adapt
Yes.
and evolve with it,
They're going to be the ones who thrive.
they're going to be the ones who succeed.
Exactly.
So keep learning, keep exploring.
Never stop seeking knowledge.
That's it for this deep dive.
Thanks for joining us.
We hope you enjoy it. We hope you found it insightful. And until next time, happy investing.